Hey, real life traders from around the world. This is Jeremy Alexander Newsome with Real Life Trading. It is indeed already September 9th, 2015. Can you guys believe that? Wow, 2015 is almost fall. Unbelievable. So let's talk about the market really quick and just kind of discuss what's going on. I think today was a very, very well played day for a lot of traders. This was a setup that we did yesterday in the afternoon swing trading floor from 5 to 6 Eastern Standard Time with Real Life Trading. We were discussing this pennant pattern that's been forming. And I guess it really kind of is still forming. And yesterday I mentioned there's a really, really good chance that we would gap up and trade down. And the reason I figured that is for twofold. Number one, you got a nice white candle yesterday. So a gap up, meaning, a gap up, people who are profitable or who did buy yesterday are probably going to sell for a profit. And number two, it's the first time that we had any interaction or any touching the 20 exponential moving average really since back here before the little flash crash thing that occurred. So we pulled into the 20 exponential moving average. This was our limit sell of 199.31, which really we opened right at that particular price, had a stop of 274. So this is the risk on that particular trade. And it's just kind of at this point, the longer it trades down, the better it will work, is my thought process. So again, volume is very, very low at the moment. This is definitely a pennant pattern that's forming on the SPY. And it's either going to break bearish or bullish. I'm not truly entirely sure which one. But I will say if we do continue to trade down and we break, if we make it down to some lows of 188 or 182, that's really all it needs to go down to, I think. I think today was a really, really good retest of these recent highs back here. So there was the other reason that I thought that would be a good place to go bearish is because people sold there once and made money, and they're probably going to try to do that twice and make money. So again, nice little gap up on the SPY. Good limit sell order that got filled on the SPY. And the DIA, I'm actually still waiting for the DIA. Didn't really get a chance to move this one yesterday. So my thought on the DIA is pretty simple. I mean, we have a little bit of a trigger. If you got a chance to sell short at the open, again, phenomenal opportunity. But at this point, I would really think if it moves much lower than it is now, 164.54 stop could be above the high of the day and above this little resistance level. And again, this pennant pattern's got to break in some direction, I would imagine. And it could break either direction. I'll definitely be the first one that might say it, that this really could break bullish. And if it does, we could retest some higher moves and then maybe roll over potentially, or like I mentioned, possibly trade up to some of these highs. So it's really, really going to be interesting to see exactly how it plays out, but I'm really pumped and stoked to see which direction it might break. Here's the Qs, the NASDAQ, the QQQ. So the NASDAQ, same thing, very, very close to where we limit sold or went bearish recently on this little pullback right there. Boom. It's the same place that we can consider doing it now. So again, I like today's gap up. The volume is a little bit light. I will go ahead and say that, yes, it is selling off from a great location at the open, but could continue higher. Tomorrow's going to be a pretty big day. It is a bullish retest gap, and we are retesting. It just really depends on how much follow through we get. And honestly, most of the movement that's happening right now in this market is happening after hours. So it's pretty hard to catch. If you're doing these swing trades, you got to be really, really fast. I mean, so for example, stock gaps up, you short the open, and maybe it continues down, but tomorrow we could gap down 1.5%, 2%, and then that would be the trade. That's the swing trade, right? You in it, and then you're out of it in 1 or 2 days. I mean, it's really, really fast the way this market's moving, and a lot of it's happening after hours, so it's very, very hard to catch the majority of it. What I'm going to do is I'm actually going to pull up our swing trades really quick. Let me go into those. I'm just going to run through those really quick and answer any questions you guys have. If you've been a lot of you've been emailing me about some of these about some of the trades that we're in, so I'm just going to go ahead and kind of run through some of the swing trades that we are in currently, and we do have set up that are official trades that are on our trade worksheet. So let's first of all just hop over to LNG. LNG, I'm just slightly more bearish on longer term for a few reasons. So this is our bearish setup on LNG. We more or less were going bearish on the pullback. So this is a trade that we were in. And the reason I was going bearish or considering going bearish on LNG is because the weekly chart, everything was breaking down. Right, here's your very, very strong support. All the moving averages were crossing. We broke support. We came back and retested. We're making lower lows and lower highs. So as of the 26th of August, mentioning kind of a weak evening star reversal, some bearish edge, look for a longer term rollover. So this is a longer term bearish trade, and just kind of keeping an eye on what could happen, what might happen, but just expecting LNG to continue down a little bit lower, potentially longer term, as this was one of the energy companies during our little energy free fall that we had a few months back. One of the few energy companies that was actually holding up pretty well. I mean, it was in this distribution phase. Looks like it's breaking out of a distribution phase, and I'm not bullish on LNG, so we are still in bearish on that particular trade. So just kind of holding through that one to see what that stock might do. Next swing trade, Etsy. So ticker symbol ETSY. ETSY. So Etsy, we're really just kind of picking the bottom on this trade. I probably will consider exiting it pretty soon. Market did gap up today, and Etsy didn't really do very much. We're in a pennant pattern like this, and it could break in either direction. So what I'll likely do, actually I can just go ahead and do it now for you guys. Let's move up the stop on Etsy a little bit to approximately 1291, which is below that support. Reason we're taking this trade, I'll just turn the moving averages off right now. They're not really a use at the moment. Is we're looking at this support at $13. So it bounced off here once, did it twice, and we're just saying, hey, maybe it'll do it a third time, right? I still don't know if it will or will not, but it is at a support. You're getting some buying pressure. You're getting some pennant patterns, and if it breaks bullish, I would anticipate that it could trade to $17.55, which is target number 1 on ticker symbol ETSY. Ticker symbol BTU, we actually canceled on. It didn't quite pull back far enough for us. Ticker symbol FCX. I know Stan and a few others are in this trade. Had a good gap today. We got in bullish on the pullback at 989. So here's our pullback. Got in bullish. Had a good volume yesterday. So I'm probably going to still hold on to this one just a little bit longer and then likely move up the stop a little bit. Here's your exponential moving averages. So above all the exponential moving averages. And this trade was really based purely on the August 27th candle. Huge candle, huge volume, very nice gap. So I was looking to go bullish on a pullback. Stock pulled back. We bought in, and now it's moving up a little bit for us. So we're up about an R at the moment. $11.92 is our target. I'll get that one in a few more days to see if that can play out. But probably we'll be moving our stop a little bit on that one just to mitigate some risk on FCX. Alibaba is really our bread and butter swing trade right now. This one is just going phenomenal. So the Alibaba trade, we had the evening star reversal pattern shape up. Our bearish entry was 69 and some change. Stop was above the high. Triggered, had a nice little flag pattern. Triggered, kept going lower. Yesterday had great volume. Today is a little bit of a bullish Harami candle. That I will agree with. And yes, we could form some type of pennant pattern like this. I'm going to leave the stop at 67.19 for probably 2 or 3 weeks if needed. I'm going to try to allow the 20 EMA to come down. If Alibaba trades up to the 20, it'll probably roll over and head to the targets. I'm going to leave, if you're in put options, hopefully you have enough time on them. If you have September and you're profitable, probably start looking to exit some of that, taking some of that profit off the table at some point because you should still be profitable in that trade. If you have October, November, December, I would say keep holding on to it and just see if Alibaba can continue a little bit lower and reach our target of 58 and some change. If you're not in the bearish trade, you can consider maybe getting in on the pullback. So just kind of keeping that on our watch list. Chevron, ticker symbol CVX. Chevron, this one, now keep in mind the market is still open right now. Everything is subject to change due to volatility, but this is a one that you could consider taking yourself as well if you're not in on Chevron. Hasn't really moved that much. Bearish entry was 76.97 and stop is 81.55. And really this is just purely playing on the moving averages. Stock pulled into the moving average, got a good white candle, and then on the 1st of September you got a new black crow. And then we failed to make a high, we got 3 little black candles in a row, broke that support. That's what we got triggered and bearish with. And now we have, again, 3 little black candles, which could be a stair step. That could be a stair step. And if we start moving lower, I would imagine that we at least make it down to this support and probably and hopefully our ultimate target is 69.84 on Chevron. So we are in bearish on Chevron. Got some bearish setups on that. Ford, ticker symbol F. Ford, good old American company. Ford, same thing. If you're not in on Ford, you want to consider getting in on it. It's totally up to you. I'm not personally in Ford. I don't trade Ford or General Motors. I don't really like the cable companies, telephone companies, or automobile companies other than Tesla. I don't really trade them that often. But anyway, stock had a nice retest right here in pink that I'm drawing into the moving averages. This really could be a flag pattern that we're forming right now, and the moving averages are obviously bearish on the daily chart on Ford. Here's your weekly exponential moving averages. And on the weekly exponential moving averages, the moving averages are coming down, and the 10 EMA is right at our stop. So my thought is on ticker symbol F, if we start making a lower low and a lower high, if you want to consider 1348 as a bearish entry with a stop at 1418, you definitely could do so. Target could be down at 1208, or if you're really feeling froggy and you want to try to take it all the way down to the wick, the bottom of this wick, I mean, obviously you have some great risk reward there. It'll be interesting to see how that plays out on Ford, but at this exact moment in time, I am just slightly more bearish than bullish on Ford, but I'm not in that trade personally. Apple, let's check out Apple. So Apple had an announcement today. Wasn't really anything spectacularly interesting, I don't think, at least in my opinion. We did get traded in bearish yesterday on Apple at 111.61. If you want to trade Apple bearish, what I'm looking at is something very interesting, is the weekly chart. And I'm looking at the weekly chart because the 10 EMA is about to cross the 50 EMA on the weekly, which hasn't happened in quite a long time. In fact, the last time it happened was back here when Apple had a little bit of a, well, pretty solid retracement, and then right there, and then kind of right there. So that was a little bit of a false cross back here in 2008. Stock came up, and then it did like everything else in 2008, went down a little bit lower. So either way, Apple hasn't crossed, the 10 hasn't crossed the 50 on the weekly many times before, but it's kind of about to cross any day now, truly, on Apple. So if Apple can continue to hang out down here and trade sideways, it will. On some level, Apple does kind of look like a head and shoulder pattern to me, with a neckline around 122 and some change. So if we trade it down, we could retest all the way back up here. Again, this would just be an R if we're wrong. If we do roll over, no big deal. But my thought is there's going to be a lot of resistance coming in here very soon on Apple. And if we come back to the daily chart, the 50 exponential moving average is going to provide some serious resistance as well. So my thought is if you're trying to get in bearish on Apple, again, kind of like the market, you're in a very nice pennant pattern. Stop if it's above the most recent highs on the pennant. If we roll over, I think tomorrow would be the day. If we're going to continue lower, tomorrow and or Friday could be the day where we head a little bit lower and make some magic happen on the market. So that'd be kind of interesting if it plays out that way. But anyway, there's Apple. Got our risk in place, and pretty much every time it pulls back, I'm gonna look to short it at some point. Ticker symbol SAVE, Spirit Airlines. Spirit Airlines, we were set up and ready to go. Has not triggered yet. Breaking a strong support of 52.91. If it closes below 49.61, that for me will be a bearish confirmation. Stop would be 53.59, and you can see there's that strong support that we're breaking. Moving averages are bearish on Spirit Airlines, and it just looks a little bit more bearish than bullish. Talking about other airlines, let's go look at Boeing really quick. We got a bear call spread on Boeing, 137, 138, and some also have a 138, 139, which in my opinion is definitely the safest. But we had a strong old support, new resistance here at about 135.74. Had the 20 EMA right there. Glenn Usher found some really good confluence around 135 for the on some fib levels. So that should hold a little bit. At least I would imagine that it does. You have a very strong gap that we did retest. So if we start making some lower lows and lower highs again tomorrow, Friday, then I would imagine that this expires just fine next week. If not, we can always have a little bit of a line just above today's highs to simply exit that spread and let it do whatever it's going to do. But again, here's Boeing on the weekly charts. And ladies and gentlemen, as crazy as it sounds right now, there's going to be a lot of stocks that are going to start interacting bearishly with their weekly moving averages. And Boeing hasn't been below its 10, 20, and 50 exponential moving average since back here, which again, it could do the same thing, right? Form this giant pennant pattern, get into a consolidation and continue. Longer term on the market, I am still bullish. Short term, I am still bearish. You can see a lot of the bearish setups that I have. But I'm, again, the bearish market, just for a long-term perspective, has not been confirmed yet. So anyway, there's a lot of resistance on Boeing. Hopefully that'll continue to play out and stay below that 137 area. Well, let's look at 2 or 3 more. So let me go, hop over here to Twitter. Twitter is also one that I'm keeping a very, very close eye on for some bearish trades. There's a lot of people who want Twitter pretty badly to get bought out. I just don't know if that's going to happen or not. So $26.60 was a bearish entry on Twitter, which did trigger today. Got a little bit of a hammer candle kind of coming in at the moment. As an ulterior perspective, this could form a very, very ugly inverted head and shoulders. It'd be very, very ugly if it did. But we have a very, very strong old support, new resistance at about $29.51. The stop on this bearish trade is $30.06. And again, come over here to a weekly chart. We're below our moving average on the weekly chart. The 10 EMA, which we have failed very nicely before, is now below our stop. So my thought process on Twitter is we'll probably do something like this. The moving averages could come down and likely will roll over. If we don't, no big deal. It's only 1 hour of risk. But I'm keeping a bearish eye on Twitter. I don't know who's going to buy them out or when or why. So I don't think until they start getting some buyout bids, they probably will continue to go down a little bit lower. At least it's just my guess. Let's look at 3 others: Vera Bradley and GoPro and the fresh market. So Vera Bradley, I'm actually looking for a pullback based on this gap. So here is a beautiful gap and go. It gapped above long-term moving averages, great volume, cleared some good pivots. So I'm just seeing if we can get a pullback on Vera Bradley. Limit buy of 12, stop at 11, target the 200 simple moving average, and then ultimate target is 1981. So yeah, it's definitely a longer term trade. Here's the 200 simple moving average, which is at 1549. So again, I don't know if it's going to happen or not, but if it pulls back to $11, I think it'd be a good buy overall. The fresh market, I think is actually a pretty good trade setup. If you're not in, you could still have a really, really good risk-reward ratio. We have a stop at 22.94, which is above the shooting star candle on the second. That's how we were playing it. We said, all right, well, we have a really good shooting star. This is a beautiful bearish gap and go. The moving averages are bearish. Here's the moving averages. And you can see that we were right on the 10, and now the 20 is coming down just a little bit. So if fresh market starts rolling over a little bit more, I mean, people have shorted at this level before. Again, like everything else, be a great pennant. And if tomorrow or the next day or something like that, we continue a little bit lower, I think that'd be really, really interesting overall. And last but not least, I know it's a long update for today, but I want to fill you guys in a lot of things. GoPro. I was actually looking to go bullish on GoPro with a close above 39.43, a stop at 35.83, just simply playing it off support. I mean, notice how many times it's bounced. Boom, boom, boom. Doesn't look like it's bouncing, so it doesn't look like we're going to close above that trigger. My guess is GoPro might be a little bit bearish. It's very, very extended right now. So in order for me to trade it bearish, I got to see something like this and then something like this. So some type of retests of this old support, new resistance. And if it doesn't retest, no worries. But if it trades down to 28.34 at that point, I'll be keeping a very close eye on GoPro, seeing if it'll be a good buying opportunity, because that's kind of the old IPO price down here, which might give us a good buy low, sell high scenario. Ladies and gentlemen, thanks so much for watching this real life stock review. I really do appreciate it. Feel free to post on your Facebook, your LinkedIn, your Twitter, share it with the world. I am going to do another one Friday, and until Friday, ladies and gentlemen, remember, love life, live life, and trade it. Happy real estate month at Real Life Trading, and I'll see you guys soon. Bye.